Welcome to Stock Talk with Mike. Today I want to talk about what's going on with Teladoc Health. In my opinion, Teladoc is the clear hands down leader in the virtual healthcare space. And since I did more of a deep dive video on them about 2 weeks ago, their stock has just continued to be on fire. It's up another 20% or so in the last 2 weeks. So I want to give a bit of an update on a presentation they just recently did at the JPM Healthcare Conference, which is the biggest conference in the industry. And reading between the lines from that presentation, what I think is in store for their Q4 earnings that they're just going to be reporting in a matter of weeks. And if you haven't already, please consider subscribing to the channel and liking this video. I like to do a lot of deep dives into disruptive, innovative companies, and that's really my investment style as well. I really focus on long-term investing in quality growth companies, but I also like looking at fundamentals. And I think that strategy is the most sustainable method of achieving market-beating returns over the long term. If you're not overly familiar with what Teladoc does, you can check out the previous video that I did on Teladoc that does a bit of a deep dive into their business. But I really want to focus this video on a couple things that really stood out for me from the JPM Healthcare Conference presentation. And the big one really being this revenue piece. So looking here at their slide deck on revenue, they're estimating for 2020. Now, obviously 2020 is done and they have a really good idea what 2020 is going to look like. It probably just hasn't been audited yet before they do their financial Q4 report here in a couple weeks. So they're estimating for full year 2020 revenue now of $1,091 million to $1,093 million. So pretty tight range. And that is massive growth over last year. But what really stood out to me of interest, you compare that. So let's use that number there, the $1,093 million. And we compare that to the guidance they gave at Q3 of 2020 in the last report when they reported in September. They actually gave full year guidance for the rest of the year. And you look at here from my last presentation where I talked about this, and look at the bottom in green here. For full year 2020, we expect revenue in the range of $1,005 million to $1,015 million. So over the last couple months, they've actually upped that guidance now to $1,093 million. And that's actually very significant. So you look up here in the top green section here, I have for Q3, the guidance they gave for Q4 was revenue in the range of $294 million to $304 million. But with this new number they're using as an estimate for 2020, their updated guidance is for $382 million on the quarter. That's a 26% increase from the top end of the guidance they gave for Q4 at the end of Q3. So that's quite significant. And I can't help but think that investors are getting on side and institutions might be getting on side and seeing that revenue is just going to be massive here when they report in Q4. So pretty impressive stuff. And you lay that over what that means for the year outlook. I actually went back and pulled up their Q4 of 2019 for comparison. And you look here, the first column where I have the green, for Q4 2020, that $382 million, Q4 of 2019 was only $156 million. So I'm thinking they're going to report 144% increase Q4 year over year from Q4 2019. So just massive. So in Q3, the last report, they reported $288 million, which is 109% year over year quarterly increase. So their revenue of 109% last quarter is actually most likely, I'm thinking, is going to be accelerating, which is just incredible. And you look at the full year range with that number of $1,093 million, that is a 98% increase over 2019, which was just $553 million. So pretty impressive stuff, and much higher than the original guidance that they gave. And just find that in their presentation slide deck. This isn't so. I'm feeling very confident with Q4 that what we're going to see is going to be in line with the number they presented at the healthcare conference just 2 weeks ago. I just want to point out this one other slide from their presentation deck. And it's about the market opportunity that Teladoc has. So they think that the virtual care market is a $250 billion industry in the US. Now, their annual revenues are still just over 1 billion. So there's a massive opportunity, and they're the clear front run leader. And there's still such a small percentage of the market share of under 1%. They're really the industry leader. Their clients are 40% of the Fortune 500 companies. And the one thing about their business now is that they're 80% of their revenue are subscribers. So they have that reoccurring revenue stream that just analysts and investors love to see because it's so sustainable over the long term. And they have over 90% retention over their members they've seen in 2020. So I've updated my analysis with an updated price target on Teladoc, and I used the current share price of $287, which last time I did this 2 weeks ago was just $222. And the market cap now is just shy of $42 billion. So remember, for market cap, you just times the share price by the number of shares outstanding, which you can get on most financial websites. And then for the revenue for the year, I just used the guidance for full year that they provided on their last Q3 report. And they're operating at a loss right now, so there's no PE ratio, but they're trading at about 41 times sales. So that's just market value divided by revenue for the year. And that's quite steep, but honestly, a company that's growing at 100% per year right now, year over year, is going to trade expensive. So it's really difficult to put an accurate value on this. And based on what I'm expecting for Q4 is another just massive quarter, actually bigger than Q3, I think the premium might be justified. So for revenue, so Kathy Wood of ARK Invest are huge believers in Teladoc as well. And they believe for the next 5 years that it's going to continue to grow at 50% per year. So I did use that number to give us a revenue projection outlook for 2026 of $7.7 billion in 2026. That does seem quite high, but at the same time, they have 98% growth here in 2020, and even actual revenue in 2020 is going to be higher than this 1 billion here. It's going to be closer to 1.1. So they already got a bit of a head start on getting there for 2026. And looking here at expenses, I could see these getting down closer to a 55% margin as they stop aggressively acquiring companies and reduce some other costs like sales and marketing as well. And so using a PE of 45, a price to earnings ratio of 45, which I think it would be quite cheap actually for a subscription revenue company that would still be growing at close to a 50% clip, that'd be extremely cheap. That would put at a price of $1,075 by 2026. And that would be a 275% return from today's share price. And that would be an average annual return of just over 30%. And so I think this is totally reasonable. Yeah, revenue could average 40%. In fact, in their presentation, they said that they expect revenues to grow closer to 40% over the next 3 years. But I think they do have a history of under-promising, so I do expect it to be below that. But even if it was 40%, I could see them trading at a much higher PE than 45. So I think this price target is quite reasonable for over the next 5 years. And that's where with a company like this, a disruptive company, I don't personally sweat the short-term volatility. I look at big dips as buying opportunities if no underlying fundamentals have changed. And on large run-ups like this, I hold tight or maybe trim a little bit. But going into Q4 and this big run it's had, I expect a massive Q4 report based on the numbers I saw at their recent presentation they gave. So I'm not too worried about it. I really like Teladoc for the long term. It has had a big run, so I don't know if I'd be jumping at buying more shares today. But it is currently one of the larger positions in my portfolio. I did load up more when it dropped into the 180s a month or two ago. But I feel very confident holding into Q4 earnings here based on the data I saw at the recent presentation they gave at the JPM Healthcare Conference. So I think if there's any pressure on Teladoc, it might be post-pandemic when revenues grow to more reasonable levels. I think they'll still be growing fast, but maybe not 100% clip fast on the other side of the pandemic. So that could potentially put some pressure on the stock over the over the medium term. But long term, I think it's a great play in a disruptive industry that's only going to grow over the next 5, 10 or more years. Anyway, that's about all I got for you today. I hope you found this video useful. But remember to always do your own homework before making any investment decision. I think conviction is key, and it can really help you during those volatile times in terms of what you should be doing, buying or selling. So always do your homework. And thank you so much for watching. Happy investing.